Hi, everybody. My name is Catherine Ring, and I am the Chief Marketing Officer at Z Suite Technologies. Thank you so much for joining us here today. We're going to be talking about managing liquidity with digital escrow and subaccounting. Our host, or I'm the host today, but our speaker today is Nathan Baumeister. He's going to be taking this over in just 1 second. If you have any questions, feel free to enter them into the chat at any time, and I will be monitoring that, and Nathan will be able to see those as well. We definitely welcome questions throughout. So with that, Nathan, please take it away.
All right. Thank you, Catherine. Excited to spend a little bit of time today chatting with all of you. As the title of the webinar says, manage liquidity with digital escrow and subaccounting. Deposits are definitely on the top of many people's minds. Managing interest rate risk and just overall asset liability management is something that a lot of bankers are worried about and thinking about on a day-to-day basis. When we started our company in 2019, we spun out from a bank out in Massachusetts. Driving deposits was a big focus of our general reason for being. Obviously, 2019 was a little bit of a different environment for managing liquidity and driving deposits, but luckily it gave us quite a bit of time to build out what we do now here at Z Suite Tech, which is to help financial institutions grow deposits on the commercial side of the balance sheet, specifically through escrow accounts and sub-accounts. Now, this is a great way to grow deposits, especially in a very niche way. But it's also something that many financial institutions across the United States don't know much about. And we'll talk a little bit of why that is as we go throughout this webinar. But it's because of that the main focus of what I'll be going through today and presenting is to answer this question: what is commercial escrow? To define the opportunity that it exists, to give very specific use cases, not to say that these are the use cases that you would use in your market, but rather to give you all an idea or a kicking off point to think of what opportunities do exist in your marketplace. So when we talk about commercial escrow and sub-accounting, there's two general broad categories that we typically discuss. The first one we refer to as three-party accounts. As you can see here, this is an account where there are three parties involved with any one given account. This is different than most of your banking account relationships, which are two-party accounts. So first and foremost, you have the financial institution itself. That's where the money is going to be held. Then you have a company who is responsible for holding the money. They are the signers on the account. They're the ones that are managing the money on a day-to-day basis. However, there's this third party involved, and they are the ones that actually own the money or to whom the money belongs to. And so when you create this structure, there's a couple difficulties or wrinkles that you have. First and foremost, when you have these three parties, oftentimes in the typical banking technology infrastructure or technology stack that's utilized throughout the industry, the ability to manage easily these three parties, especially the customers at the end, kind of breaks that hierarchy that's set up. This is with the core systems, with digital banking, et cetera. Because most of the time, the person who is the signer on the account and is running the money and the transactions and all that stuff is the same person to whom the money belongs. However, in this case, the company is the one that's managing that money, but the money actually belongs to those customers. So that's one reason that it creates some difficulty to support these types of accounts. Again, this is something that we've built our platform to overcome. The second reason that this creates some difficulty is in these types of relationships. Oftentimes they're referred to as escrow accounts, but sometimes custodial accounts, trust accounts, FBO accounts. There's multiple different names for these types of accounts. But when you look into this, legislators often feel that this is something that they have to create laws to protect the customers from the company who is handling the money on a day-to-day basis. Now, I wish I could tell you that there was a national escrow board that looked across escrow accounts across the nation and across all different use cases. And they said, here is how escrow accounts need to be treated. Unfortunately, that is not how this works. What we've seen is that the legislation can depend on multiple factors. First and foremost, it's on geographic. So in some cases, there's federal laws, in some cases, there's state laws, and in some cases, it goes down all the way to the local jurisdiction. And in some cases, you actually have a mix where there's some federal laws, state adds some extra things, and local jurisdictions add some more. The second access that you can look at that you see this legislation is across industries and use cases. So for example, within the legal realm, when you're talking about a custodial account, it could have and does have different rules than security deposits for a property manager, which have different rules than nonprofits using this for if they're managing different associations, right? So there's a lot of different rules that come in, and this creates additional complexity. Now, why does this matter to the bank? Is because in some cases, those rules require the bank to treat these accounts differently. But also it means that your customers, the companies that are actually holding the funds here, have these additional requirements that create a lot of manual effort. But this is the first big use case, three-party accounts. The second one we typically refer to as subledger accounts. Now, subledger accounts, it just comes down to this, and we actually put an example here. You have something like a municipality, but there's multiple other types of accounts, multiple different types of business entities that will do this as well. But they have a pool of money, and they want to split that pool of money up in different ways. Now, they might not want to open up a completely separate account, but they do want to be able to say, hey, this is earmarked for this, or this is earmarked for that. So in this case, we have, a municipality example. They have $800,000. They actually want to split it out amongst these different pies. When you dive deep into this, lots of times it has to do with accountability. It has to do with tracking. It has to do with fiduciary relationships or duties that they need to then report back to how money is being used. But in some cases, it is just like for us as consumers, if you have like a trip savings account, right, this could be used in a commercial entity as well. So when you take those two broad use cases, then the question becomes, what are the industries where you see this fairly often? And so that's where we have, landlords, property managers, title companies, law firms, municipalities, 1031 exchanges, real estate offices, nursing homes, nonprofits, funeral homes, and there's many other ones where this falls into. And each of these kind of have their own nuances and how it works. But in most cases, this is a great deposit gathering opportunity because of the simple fact, first and foremost, when you have an entity that is holding money for a different entity, lots of times this first entity that's holding the money doesn't get all or any of the interest benefit. So they're typically not as price sensitive on rate. More what they're interested in is convenience. How easy is it to open up these accounts? How much can you help me with this burden that I have to be able to follow these different complex rules and those types of things? Becomes more of the decision-making factor. But then the other piece that comes down is that, like I mentioned, a lot of the financial institutions, where it's pretty limited on how many financial institutions have opted to focus on these escrow types accounts, but oftentimes the experience of the commercial customer is actually pretty bad and requires a lot of back and forth and phone calls and emails and not being able to self-serve. Again, this creates an opportunity for the product that we've built, which is the escrow, to be able to help manage this in a much more straightforward way, to have self-service, to be able to use user interfaces or APIs to manage them, just all these different types of things. So with that, that's all nice and good high level, right? So two big use cases, three-party accounts or subledger accounts. Here's the different verticals. Lots of times when I get to this point, many of the folks that I'm talking to are like, can you give me some very specific examples so I can wrap my head around it? And so that's what we're going to do. I'm going to share 5 specific examples of ways that we have banks that are actively using the zEscrow platform to help manage escrow accounts or sub accounts. And the idea isn't necessarily to say that these are the use cases that you have in your marketplace or that you're going to serve. But I hope that as I share these different examples, you then can start thinking about some of the use cases that you might have in your specific marketplace. So let's jump into the first one, 1031 exchanges. 1031 exchanges are really, really interesting. For those of you that aren't familiar with it, there is a code in the IRS that allows for like-kind exchanges to happen where the gains of the sale of one property, as long as you invest it into something that is like or similar to that property, you are able to do so without being taxed on those gains. Back in the day, this could be used for all different types of properties as long as it was a like-kind property. So if you sold a boat, you could buy a boat. If you sold an airplane, you could buy an airplane. This has been limited specifically to real estate. It could be both single-family houses that you rent out all the way to big manufacturing facilities, right? So it's any type of property. But when you sell one property, you have gains from that. If you're planning on reinvesting those gains into another property, you can put it into a 1031 exchange. And the IRS is very specific on how this works. There actually has to be a qualified intermediary or accommodator who facilitates the exchange. This is where the escrow piece comes into play. Qualified intermediaries are going to take the gains from the seller with the intention that that seller is then going to buy something else. They will put that money into an escrow account. And then once they put it into that escrow account, which the qualified intermediary has access to, but the person that's selling does not have access to, as far as being able to move the money, they then are able to verify the different paperwork and help facilitate to ensure that when that person that just sold that property, when they purchase another property, that it is one that qualifies for the 1031 exchange and that the IRS has all the documentation, et cetera, et cetera, et cetera. 1031 exchanges bring in high volume transactions. So we're talking about, if you think about just a single family home, even that could have a good sized gain on it. But then if you think of a multinational corporation that has a manufacturing facility and they're selling one and buying another, it could be in the millions of dollars. There's a lot of complexity that goes into working with these qualified intermediaries as a bank to be able to power these escrow accounts. For example, it's going to be an interest-bearing account. However, oftentimes this interest is actually split between the qualified intermediary and the person receiving it. There's specific timelines of when the account needs to be opened or closed. There's specific things that the person that is actually doing the sale of the property, they're going to want access perhaps to statements or maybe online banking access to view the balances. Maybe they can't move the money, but at least can I see that you have my millions of dollars? So it's a great way to be able to grow deposits. Now, there's two go-to-market strategies with with 1031 exchanges. One, banks, you could go look for qualified intermediaries and bank them. Then the qualified intermediaries are the ones that are doing all of the marketing and business development to get as many 1031 exchanges coming to them. And then when they open up those escrow accounts, they're held at your financial institution. So that's one go-to-market strategy. Another go-to-market strategy that we see banks do is they actually open up a subsidiary to the bank that acts as a qualified intermediary. In this case, it decreases the interest expense of those deposits. However, now the bank is responsible for going out and finding the people that are going to be doing these exchanges. But it is a fantastic way to be able to grow your deposits. We had one financial institution that hadn't been banking qualified intermediaries at all, decided this was a focus for them. They took a couple months, both with us as well as out in the marketplace, to learn about them. And within 2 months, they already had $17 million in deposits, having brought on just 2 relationships with qualified intermediaries. And like I said, there's a lot of opportunity to be able to grow there. All right, so that's one story. Let's jump into the next one. Let's go into property managers. Now, property managers, there are different complex account structures that property managers have to deal with. Today, I'm going to mainly focus on security deposits. So if you have ever rented or you actually had a rental, you're probably super familiar with security deposits. The idea is that I'm going to rent an apartment from you. I'm on it. you're going to want that I have some skin in the game, that I keep that apartment nice. So you're going to ask me to put down a deposit, a security deposit, so that when I move out, you're able to walk around the apartment and see if there's anything that actually needs to be fixed. You then could use that security deposit to fix those things, or if everything's good to go, then you'll return that security deposit to me. This is a great example of an escrow account. That money that's being held as a security deposit is the tenant's money. It is not the landlord or property manager's money. However, the landlord or property manager are the ones that are managing it or controlling it. Now, the interesting thing with security deposits is this is one that there is no federal regulation in what can or can't be done with security deposits, but every state has their own rules. Wouldn't it be great if they're all the same? Well, they're not all the same. They're all different. And some of them are super lax. I live in Texas. It's pretty darn lax as far as what the rules are. There are certain things that a landlord here in Texas has to do with their security deposits. But then if you go out to like Florida or New York or New Jersey or Massachusetts, you'll find that there are much stricter rules. And so they can vary quite a bit. Just to give you like an idea, I'll go through, let me pick up on the New Jersey security deposit rules, just as an example. So first, the account has to be in a separate account, meaning every single security deposit has to be in a separate account. In some states, it's okay if you have the security deposits all pooled into one escrow account. In New Jersey, they actually have to be separate accounts. Part of the reason is because it has to be interest bearing, and all of the interest has to go to the tenant, right? So you have to get W-9s for every tenant. You have to produce 1099 T forms for every tenant. You have to, file that with the IRS, all that fun stuff. And not only does it have to be interest bearing, the landlord actually has to disperse the interest on an annual basis. So the interest can't stay in the security deposit account. In addition to that, you have to send an account opening notification to the tenant within a certain number of days after the account's been opened. And then, of course, you have to provide annual statements to them, both from an interest earning perspective as well as balance, all that fun stuff. So there's a lot of things that between the bank and the property manager that you have to do within New Jersey, and you go right across state lines to New York, and there's different rules, right? So the interesting thing with these security deposits are they are great sticky deposits. One security deposit account might churn fairly quickly, right? Depending on how long people live in these apartment buildings. But your client isn't the tenant. Your client is that landlord or property manager. So if they have 100 units, sure, 20%, 25% of those units might turn every year, but they're always going to fill it back up. So if one security deposit goes, another one will fill that back up. So they're very, very sticky, low-cost deposits, oftentimes in the aggregate of working with them. And so, when we apply Z escrow to this, it really helps to be able to manage all of these, especially in those states that have very strict rules and very complex rules. And as you can see, we have 800 units, and this is going to save us so much time. When can we get on it? We got them on it, by the way. So they're pretty excited about that. All right. So the next one I want to go into, this is one that, a lot of people don't actually think about this, but I think it's a good example to, again, kind of get your mind thinking about different ways that escrow accounts are applied out in the wild, if you will, are nursing homes. Now, there's different types of nursing homes. Assisted living, memory care are more the ones that we're going to be talking about right now. And the reason is because lots of times in assisted living or memory care, the residents of the nursing homes don't have the capacity or capabilities to be able to manage their money. However, they need to have their own money. And so what happens is the nursing home becomes that custodian for the money of their residents. And then they are paying for their different services, meals, whatnot, for and on behalf of their residents. Now, obviously, all of us should care deeply about elderly abuse and, making sure that anyone that doesn't have the capacity to manage their money isn't taken advantage of. So there are a lot of rules, and there are a lot of organizations that audit nursing homes that do this to make sure that they are doing so appropriately for their residents. But again, you look from an escrow perspective, this is a great example of an escrow perspective. The customer of the bank, the client, the signer of the money is the nursing home or the operators of the nursing home. However, that money belongs to the individuals. So you need to have really, really good tracking across all the different residents. It will be audited, so there needs to be traceability, there needs to be reporting available, et cetera. There needs to be tracking of transactions in multiple different ways. There's interest related to this. Like I said, a lot of reporting, making sure that you have the appropriate naming of beneficiaries and all that stuff set up. So, there's one bank that has dove into this quite a bit. They actually had been doing something in-house with about 18,000 of these nursing home accounts and kind of pulling their hair out because of how much effort it was to manage those. So it's something that, we're working with them to build out, to take away those manual efforts and make it way more automated as possible so that nursing home operators feel more in control to be able to open up these accounts, manage these accounts. Even from a social security perspective, a lot of these residents are having social security checks to come in, and there's a lot of codes within NACHA that has to do with these types of accounts, say where they're enrolled and all that stuff. So a lot of complexity there, but able to help make it more streamlined so that you can serve these types of customers very well while also helping them to be ready for audits and compliance for their specific business. All right, next one, municipalities. Now, municipalities have lots of different use cases. These government organizations, government agencies, lots of different use cases as far as why and how they use escrow and sub accounts. We provided that example at the top of the presentation, where municipalities will oftentimes have a pool of money that they want to be able to track for earmark purposes. It goes as far as we were talking to one bank out in the Northeast, where there's in their local jurisdictions, they have the government workers that when they get approval for money to be spent for certain projects, they will then assign someone from the community to actually have view access to that account to make sure that the transactions are appropriate and that they're good and approved and all that stuff. So sometimes it goes really far beyond just the pooling, but actually having real deep levels of measurement and accountability. But then you have a bunch of other examples. So one that we run into, like surety bonds or retainage accounts. So let's say a government agency contracts with someone to do this big project. And in order to get this project, the contractor actually has to put up a certain amount of money that needs to be held in escrow, that in case anything goes wrong or whatever, that money's in escrow. However, when the project is completed, then it could be released. Just that's an example. Seized funds, managing money for minors, for people that have money in their name, but they're not old enough yet to actually kind of manage it. We have a lot of municipalities, especially ones that run utilities, that the down payment to turn on certain utilities is kind of like a security deposit. So lots of different ways that we've seen folks using this. Lots of times, having good organization and understanding of how these are used and how these are organized. We have foldering systems to help do that. We'll show that in the demo when we finish off here. But as an example of one of our banks out in the east there, in 4 months alone, they were able to secure relationships with 6 municipalities. And as far as escrow deposits, they were able to get $5.5 million. And oftentimes these escrow deposits or these sub-accounting deposits are kind of the tip of the iceberg when it comes to deposits in municipality. From this bank, we actually talked to one of the bankers, and she has a great quote where she said, escrow accounts are 90% of the headache, but 10% of the deposits. But if you take care of that 90% of the headache, then your likelihood to be able to get the full length of the deposits increases quite a bit. All right, so last one, as far as a specific example goes that I want to share, is on the Medical insurance side, a lot of different use cases within the medical insurance side, but this one specifically is about insurance payouts and third-party administrators. So let's say there's a workers' comp claim and it's going to get paid out. Well, the insurance company wants to make sure that money is used for medical expenses related to that particular case. So what they don't want to do is they don't want to give that money to the individual, because once you give the money to the individual, they can do with it whatever they want. So instead, they contract with these third-party administrators and say, can you hold this money forward on behalf of that person over there? And can you please pay the medical bills as they come in through? And so that's how it's set up, right? So again, it's a good example of an escrow account. This third-party administrator is holding the money. They're the signers on the account, but all of that money actually belongs to individuals who have some sort of insurance claim that was paid out. Then the medical billing goes to this third-party administrator where they then pay out the funds. One of these examples that we worked through, this third-party administrator actually had fairly sophisticated software that they had built. And they were adamant that the bank that they wanted to work with, which ended up being one of our clients, had the ability to open up these escrow accounts and manage all the APIs. They were like, we don't want to use a user interface. Our software creates all of the data that you need to know how and when to open up these accounts. So can you please do it through that? Luckily, the bank had partnered with us and with our product, and we were able to connect their instances directly with APIs, and they were able to run it all headless, which was great. There's hundreds of millions of dollars of deposits managed in that way. So, and as you can see, this platform is amazing. It saves my team so much time compared to what we used to do, which is great. So we've had the Z escrow product. So think about Z escrow as like an extension of your cash management, digital online banking tools that you can offer to your commercial customers if they need it. We've built it in 21 is when it launched over the summer. We spent about 6 months really kicking the tires with a small set of customers. And so it was the beginning of 2022 that we really went to market with it. And so, I mean, you can see the growth that we've seen through our financial institutions, through the banks that we partner with who are offering this product to their commercial customers. And you can see all of the different types of commercial entities that are using the platform to manage their escrow accounts and sub-accounts. And subsequently, just as discussed, really nice, sticky core deposits, a good amount of growth across that time period, which has been great, especially during a time when deposits were hard to get by, and it's very, very competitive. So we've seen great adoption with the platform. Over $1 billion of deposits there at the end of January, which is great to see. We work exclusively with financial institutions. As I mentioned, this becomes an extension of the bank's cash management or treasury management tools. You can think of it as an extension to your commercial digital banking platform or cash management platform. One of our clients, I think we're at 86 financial institutions that we work with at the moment. This is one of them. Encore Bank, great bank, has locations in multiple states, but headquartered in Arkansas. This is what Bonnie had to say in working with our team and working with what it is that we do with Z escrow. The next thing that I want to go through, and I'm just going to pop this up. I'll bring this back up again, but if you do want to contact me directly, Nathan@zsuitetech.com. You're also visit our website. We have a whole bunch of things there as well, inclusive of a contact page. If QR code's easier to take a picture of to get the information, you can do that there. But the next thing that I want to go through is just a quick little demo to give you an idea of how the platform works and what it looks like, just to kind of take those specific examples that I just went through and kind of put it into practice here. So State Bank that you're looking at here is our demo bank. that we're looking at. When you look at the Z escrow platform, first and foremost, you should know it is white labelable. You don't have to call it Z escrow. It's your product, and change the colors to make sure to associate with your bank, etc. It's a web-based application. There are 3 levels of access, right? Which should make sense because they're 3-party accounts. So the first level of access, and what you're looking at here, is the bank's access. So State Bank can go into any of these tiles, which represent the second level of access, which is the commercial customers themselves are able to log in to manage their own sub-accounts or escrow accounts. And then the third level of access is to the beneficiary. So if there is a beneficiary attached with the escrow account, their access is limited, and it is also optional. But for example, it might be just to fill out a W-9 form for interest purposes, and that's all the access that they have. However, you might have some commercial customers that are going to want to give their beneficiaries view-only or read-only digital access, at which point that beneficiary would be able to log in, not to move any money, but to see the balances, look at statements, those types of things. So those are the 3 levels of access. High level, the way the platform works is on your core system. You open up a holding account for each of these commercial entities. So for example, 1031 Properties would have an account on the core. Smith Law would have a separate account on the core. The 1031 property account would have $1.383 million in that holding account on the core, whereas Smith Law would have 130,000. And then it's on the Z escrow platform that we sit on top of that account to be the system of record or subledger for those escrow accounts or sub accounts. So if we just clicked into that and looked at that for a moment, you'll see, $1.38 million. You could see transactions going from like that master operating account into the escrow accounts. They'd be able to pull their statements or the documents associated with it. Here are the sub accounts themselves that you could see individually, which ones are there. We also have the ability for them to pull reports right from the platform itself and download that data into CSV files. Really, the idea here, and this is what one of the unique things of our system within this ecosystem, is it's 100% self-serve. 1031 Properties can come in, they can open up a new sub account, extremely easy anytime they need to. Name the account whatever it is that they want, whether it's a number because they have an internal ID or it's someone's name that you can put in. You can associate what type of beneficiary type. You'd be able to get the W-9 form for interest purposes. If you clicked into any of these escrow accounts, you could see we have this one pending, waiting for those documents to be completed, and you could come in and either email the W-9 to the beneficiary via DocuSign, or even if they have the ability to, let's say they captured it some other way, they could come back and manually upload it and fill out that information there. They could close the sub accounts, they could transfer the funds. Again, all of this they are able to do right from their own system. And then just to kind of give you another viewpoint, here's another one here looking at Z Rosewood Properties. Let's say that this is one where they're using this for security deposits. You see in this case, you can see some folders that we've built out. So you have these folders for the property. And then when you look into those folders, you have the individual accounts for those security deposits. Super easy to add additional folders. You can see here, you can just add a folder, name it whatever you want, and then you can add sub accounts into it. So again, super easy. All of these actions I'm showing you through the user interface because from demo's perspective, it's way easier to show via user interfaces. However, every action that you've seen is available to be able to be called either by bulk action or bulk reporting or through API calls, right? So 3 different modes for your commercial customers to use to be able to manage their escrow accounts. The last thing I just want to touch on briefly is here in the settings for the bank itself. Remember how I talked about how, a law firm versus a municipality versus a security deposit in New York versus a security deposit in New Jersey, it's all different in the rules. Well, the way that we manage that is we build very simple templates that can then be applied to those sub accounts to define the rules that are going to work. So for example, this one is set up for 5% interest, where the earnings are split between the organization and the beneficiary. That organization is going to keep their split as interest as opposed to fees. The split's going to be 90% to 10%. and then you can determine what happens to that interest after it's paid out. So a lot of different options in regards to those templates, but is what allows us to use the system for all these different use cases. So again, Nathan Baumeister with Z Suite, really excited to have spent this time with you. If any of you have any questions, feel free to drop it into the chat. If any of you want to connect with me directly, you can see the contact information right here. But overall, we are absolutely delighted that we're able to work with so many great financial institutions in the U.S. and helping them grow deposits in a time when it's pretty difficult to do so, specifically through commercial escrow and subaccounting.
Thanks so much, Nathan. It doesn't look like we have any questions so far, so I think we can wrap it up for today. Thanks.
All right. Thank you all.
You want to go outside?
Hi.
How many people did we end up with?
Just three, and it was Sarah Hovde, John Sorrell, and Michael Yenchik. So very small, but I mean, there were two really good prospects plus a partner